Have you ever wondered where the big money is hiding in the market? The hidden volume trading strategy using the volume profile visible range indicator is your answer. Well, this powerful tool shows you where high volume trading zones exist, helping you identify support, resistance, and breakout points with precision. So if you are ready to trade smarter, not harder, hit that like button and subscribe to the channel for more in-depth trading strategies. Now let us dive right in. We're going to start by adding the volume profile visible range indicator. Okay, we're going to add it to the chart right away. The volume profile visible range indicator, or the VPVR, right? So this powerful tool can assist you with information concerning volume, right? Concerning volume. So the VPVR is a volume-based indicator that displays where the most trading activity has occurred at different price levels. Okay, so instead of focusing on time-based volume like a standard volume bar, the VPVR shows you price-based volume. As you can see, the price is price-based volume, right, at different prices, not the time-based. Remember that time-based are vertical, but the price-based is horizontal, right? Okay. So this helps you identify key levels where buyers and sellers are most active. Okay. Now, the main components of the VPVR include the high volume nodes, areas where a lot of trading activity happened. These often act as strong support and resistance levels. Then we have the, low volume nodes, which are zones with minimal trading activity, and price tends to move quickly through these areas. Then we have the point of control, the price level with the highest volume traded. Okay, that makes it a key decision point for traders. So now, the hidden volume trading strategy revolves around identifying these key levels. Now, concerning support and resistance from high volume nodes, if price approaches a high volume node, it is likely to stall or reverse. Okay. Then now talking about breakouts through low volume nodes. When price moves into a low volume zone, if price should move into a low volume zone, well, let's see, where are the low volume zones around here? We have areas like this, we have areas like this, here, right? So when price moves into the low volume zones, there is less resistance and it tends to move quickly to the next high volume node. Then the point of control acts as a magnet. Price often returns to the POC before making a decisive move, making it a great area for trade entries. So now let's just quickly break down a step-by-step process to use the VPVR effectively. The first step is to apply the volume profile visible range indicator on your chart, which we have done already. Then the second step is to identify high volume and low volume zones, right? Remember that you just have to watch out for the volumes. You can see that we have high volume zones around here, right? You can see that these areas kind of, right? So these areas are kind of high volume zones, right? These are high volume zones. So you watch how price reacts at high volume nodes. These often act as strong support and resistance. Can you see that? They often act as strong support and resistance. Then you look for breakout opportunities when price moves into a low volume zone. Okay? When price moves into a low volume zone, you look out for breakout opportunities. All right? Then ensure that you always get confirmations. Use confirmation tools like candlestick patterns, or momentum indicators to validate your trade setup. Okay, so by following these steps, you'll be able to spot high probability trade opportunities that most traders miss. Now, the hidden volume trading strategy using the VPVR gives you a huge advantage by revealing where the real action is happening in the market. By understanding high and low volume zones, you can make better trade decisions and improve your overall trading accuracy. When you notice that a particular price zone has a high volume, if you are a kind of trader that likes to trade during periods of high volume, then you're going to find that really beneficial, right? You want to concentrate your trading around those areas. And remember that those areas can give, good support and resistance zones. Just look at what happens around here. You can see a rejection point. You can see a rejection. You can see a rejection. You can see a rejection around this high volume zone, right? You can see again rejection here, around this zone. Even come here, you can see rejection. You can see that the rejection actually, it goes backwards, right? You can see. So these areas, there are significant areas on your chart where you want to pay close attention to, right? Where you want to pay close attention to. Okay, then remember, looking out for breakouts when price, moves into low volume zone, because it's likely to trend fast. It's likely to trend fast. So you can see how this, after this breakout occurred around here, you can see how swiftly, how it rose into the high volume zone, right? You can see how swiftly that it rose into the high volume zone within this parallel channel, right? So just pay attention to price reactions around these zones, and then you trade accordingly. Meanwhile, just make sure that you are trading in the direction of the trend, regardless of the the level of volume at a given price point. Make sure that you are trading in the direction of the trend. So when the trend is bullish, you should be looking for buy opportunities, right? Buy opportunities when, after a pullback and then you get a continuation pattern, you can look for a buy opportunity. Set your stop loss below the previous swing low. Take profit target can be around resistance zones, and then if it is the case of a sell, when you get a sell trend, ensure you get a confirmation. You set your stop loss above the previous swing high, and then take profit can actually be at support zones. All right. So just ensure that even while inculcating volumes, right? If you are using the VPVR indicator, even while inculcating volume into your strategy, make sure that you are observing good risk management. Okay. Do not trade with an amount that you cannot afford to lose, and make sure that you are using good risk to reward ratios. It is very important. All right. So if you found this breakdown helpful, smash that like button and subscribe to the channel for more game-changing trading strategies. Also, drop a comment below. Have you used the VPVR before? Let me know your thoughts. See you in the next video. Happy trading.